Hey everybody, this is Rob Keens with goldsilverpros.com. It is Monday, August 23rd, 2021. As you can see today, I'm wearing my Mexico shirt, Nueva Vallarta, that I got down there in Mexico about a month ago. It was a lot of fun on the trip, and I really enjoyed it. It was fun hanging out with Chris Marcus and planning for his upcoming Silverfest and just getting a little bit of time off. Then, of course, this past week, we had the conference, the Money Metal Summit 2021. We had a load of fun on that. We're going to be editing and posting those videos here in a little while. For those who weren't able to attend it, expect that to come out over the next 2 to 3 weeks. Today, we're going to be doing the third part of our uranium series. The first part was aired about a month to a month and a half ago when superfan Steve Mueller came on. He is an avid investor and a dentist by trade, and he was giving us the bull case for the uranium market. Last night, Steve came on and rejoined me on the program and talked more about the uranium bull market, how what he had predicted had come true. We had the price pullback and then almost an immediate reversal because of Sprott's involvement in the trust for uranium, where they're buying a lot of many pounds of uranium. Not only is Sprott investing in uranium companies, they're actually buying the uranium itself to help with the price discovery in uranium and get that uranium price up to where we need it to be, because it's trading right now under the cost to mine it. He gave us some of his investment prospects last night. I fully invite you guys to look at that video last night. Steve has great research. We talked about 40 minutes, and I thought it was really good information. Tonight is part 3, and I'm going to give you some additional information that I have dug up on uranium as well as talking about the target I want to talk about, which is UEC, a company I've been following several years, probably dating back to 2018 since I first came across them at VRIC. Now, I've written about uranium and thorium over 10 to 12 years. Most of that was done on Seeking Alpha. And I've started to just now cover uranium on the Gold Silver Pros channel, because while we are a gold and silver focused channel, we do talk about all investments in all markets, as well as the general economy, to help people out. And when we see a commodities boom coming, we'll talk about other commodities as well: copper, zinc, lead, and uranium as well. So I want to get straight into the presentation, guys. We've got a lot here to share with you today. Let's go ahead and get this one playing out. Get our controls out of the way and go hit the play button and get this one started. And there we go. This is Nuclear Energy 2021, and I'm going to be focusing on Uranium Energy Corp here at the end, but I've got some additional research for you on uranium itself, which I think is going to help you make your decision. Why are we talking so much about uranium? Well, we're going to get into that in the presentation. It's in a supply deficit after years of supply destruction, after a price crash. And what the world is figuring out is they can't live without uranium. About 10% of all world energy is produced through uranium. And many people think that that's going to hit 20% here pretty soon, with all the government green initiatives around clean burning fuels and the advancements in handling uranium and making it a relatively clean fuel. Uranium has come back into vogue. Here's some information about environmental social governance programs. These account for a large part of the world economy now, as companies are moving to ESG initiatives. Whatever you think of them, ESG initiatives are here to stay. BlackRock's head of iShares Americas, Armando Senra, expects that ESG investments could become a $1 trillion category by 2030. As you can see here on the chart from the US SIF Foundation, they expect ESG incorporation to get into about $18 trillion here by 2020. As you can see on the chart, this is in billions and it's 18,000. So $18 trillion of corporate investments by 2020. So ESG is obviously something that's very big. It has grown since the mid 90s when it really started. And ESG programs are big. Companies that offer ESG solutions are big, and companies that fit into ESG programs, especially through the US government, which is big in uranium, we'll see here in a moment, are very big as well. So those become big investment opportunities for investors. So there is a policy, a political, and also an actual industrial need for uranium in ESG, environmental social governance. One of the great things about uranium, if you want to reduce greenhouse gases, now I personally don't believe that carbon dioxide is a greenhouse gas, but the policymakers do, and that's all that matters here, okay? That's all that matters from an investment perspective, and that's what we want to focus on. Nuclear is one of the lowest greenhouse gas emitting energy sources, and we're going to see in a minute how it's one of the most powerful energy sources. So not only does it emit lower greenhouse gases than lignite, coal, oil, natural gas, solar, solar, biomass, and about as low as hydroelectric and wind. But the energy production is so much greater than some of these others, as we'll see getting into the program. Carbon neutral initiatives. These are some of the initiatives around the world about going carbon neutral. Again, whether you think that carbon dioxide is a greenhouse gas or not, the rest of the world's policymakers do, and that's what matters in this investment thesis. And I'm not going to make a political argument, yay or nay on carbon, but I'm just certainly going to say, looking around the world, you can see where the world leaders are going to do this, and it's going to affect those power sources which allow them to go carbon neutral, such as nuclear. President Xi Jinping announced at the UN General Assembly in September 2020 that China would strive to achieve carbon neutrality. They would adapt more vigorous policies and procedures to peak emissions before 2030. They're reducing coal usage and increasing nuclear. We'll get to that in a moment. Denmark set out plans in 2018 to build a climate neutral society by 2050, including ban of sales of new gasoline and diesel cars from 2030. The European Commission is working towards a multinational 2050 net zero emissions target under the Green Deal. This has been endorsed by the European Council of National Leaders. French lawmakers voted a 2050 net zero target into law on the same day as a UK Parliament passed a similar 2050 target amendment. Japan promulgated its 2050 net zero target law in May of 2021. Japan is the world's 5th largest emitter, and it relies on coal for a third of its electricity generation. But this will have to change as the nation implements new emission controls. What's Japan going to do? Start up new reactors. Germany established its 2045 net zero target in law in June 2021 after raising its climate ambition following a landmark court ruling the previous month. The Canadian Senate adopted a Net Zero Emissions Accountability Act in June 2021, making Canada's 2050 net zero target official. And the US, President Biden ran on climate platform to aim for net zero emission by 2050. With this, Biden promised $2 trillion clean energy revolution and 100% clean electricity by 2035. You can see how the world's leaders are moving here. Whether or not you believe in greenhouse gases and carbon dioxide, it doesn't matter from the investment perspective, and that's all we're talking about. It's very clear that the world's leaders do. And you see 2035, 2050, all of these dates that they're enacting these initiatives. And you're not going to get there by burning coal and natural gas, and you're not going to get there in solar and wind. One of the big things that we talked about yesterday was my experience in Texas. When Steve and I were talking about how the cold front hit in February and how it tore apart our electricity production, because Texas had been moving from coal and natural gas into wind and solar, and the solar wasn't getting the sun output because we were having dingy days, dark days, and storms, and so we're getting not nearly the solar output, and the wind motors had frozen, and so they couldn't turn. They weren't producing electricity, and that led to massive grid outages, people basically dying. There were a lot of people that died because of the cold, and them having to do rolling blackouts, which affected mostly the suburbs and the lower middle classes, of course, not the rich and people that lived in the cities. Okay, and you can see where not having reliable sources of energy to burn to support the grid is an issue. Now, I live in Texas. We're in 100-degree temperature time of the year, which basically runs from June through July, maybe early September, where it's between 90 and maybe 105 every single day of the week. And I've had 2 blackouts hit me where I live, and then a couple of brownouts as well hit me where I live, which has been validated because I hired an electrician to come look at it. He says, it's not your house, it's the grid. And then I've talked to my neighbors and they say the same thing. So Texas is still struggling with its electrical grid because of its move away from coal and natural gas into these renewable energy sources, which cannot provide consistent base load. We know that as a fact. We are living proof of that, and the studies show it also. The only way around that, if you want to get rid of coal and natural gas, is to go nuclear. That is the only way to get reliable base load. Global ESG map, continuing the ESG trend. You can see all the projects around the world and what they're doing. This is a global map of nature-based solution initiatives for adaptation, showing the number of investments per country. The geographic distribution of cities reporting on nature-based solution activities, the red dots. You can see all the red. Look at the Americas, North and South America. Bam, 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 bam. Red dots everywhere. Then you look at Europe, Africa, Asia as well, Australia. The regional distribution of hazards being addressed by nature-based solutions initiatives. Okay, pie charts. So they look at the different hazards in the pie charts and the initiatives. Okay, ESG is here to state nuclear is a part of ESG. It's the only solution to help the governments reach ESG, period, end of story. That's why Sprott's getting involved in buying 900,000 pounds of uranium in August for its trust. And that's why Sprott is involved in all these companies. Sprott is wise. Sprott knows what's coming down the pike, and you're not going to do it with hydrothermal, hydroelectric, and other renewable sources like solar and wind. You cannot get reliable base energy from all of those, at least enough to meet 100% of requirements. You have to mix it in with others. And if you want to get rid of all the greenhouse gases, the oils, the natural gas, the coal, the only alternative is nuclear. And right now, the only alternative is uranium and not thorium, because while we believe we have amazing stockpiles of thorium in the US, the US wants to go to uranium. The rest of the world wants to go to uranium. The thorium revolution is not here yet. And even if they started today, it would be at least 20 years before you could make that happen. It's uranium right now. So from an investment perspective, the only solution right now is uranium to meet these needs. Uranium power is superior in a lot of ways. Capacity factor by Energy Source 2019, according to energy.gov, 93.5% nuclear. 56.8% can be done by natural gas. You could almost do all the grid power in the US by nuclear alone. Only a little over half in natural gas, less than half in coal, about 40% hydropower, about a third in wind, and about a quarter in solar. And remember, wind and solar are unreliable, especially in heavy weather conditions. Ergo, or e.g., the issue I had in Texas earlier with the bad weather. And if you're in the Northeast in a blizzard, you may get some wind, but you sure as hell aren't getting solar. And the wind is going to be hampered by freezing rotors and freezing motors. You have to have reliable base energy. Okay, hydropower, you can't get hydropower everywhere. It's only where you have dams and streams and creeks and things like that, where you can dam it up and create that hydropower. It's very limited. It's very effective, very low emission, okay, but it's very limited. Coal is one of the dirtiest burning fossil fuels. Natural gas is somewhat better, cleaner burning, but you can't put the entire base load on that. And we saw in Texas that the natural gas wells froze. So unless you winterize it and spend billions of dollars of spend on it, you can't rely on natural gas. It has to be new. There's no other way. It has to be nuclear. Okay, this is the bull market thesis. It has to be nuclear, and it has to be uranium. Who's building reactors is something Steve and I talked about twice. 54 reactors under construction. I said earlier in the presentation that China was building reactors to replace its coal, because coal is very dirty, and China had horrible pollution problems. And you can see here they're building 16. India is building 6. Republic of Korea 4. Russia 3, the United States of America 2. That's 54 reactors under construction around the world. And this is right now. There's going to be more. There's no other way. No other way. No other way. No other way. There's no other way to meet energy requirements than to build more reactors, period. And to meet ESG requirements, period. All right, moving on. Uranium price has fallen. I could show you a chart dating back 4 or 5 more years, where it's a lot higher than it is now. I think it peaked around somewhere around 138, I believe, when I did my research. Right here, it's just sitting around, the $30 range. It's way below what it was dating back to 2011. It's going to come back up. It is in a cyclical low in the middle of a commodities market that wants to absolutely blow up and explode all over the fucking place. It's going to blow up, and uranium's going to go with it. Now we're going to talk about Uranium Energy Corporation. We talked about some targets with Steve yesterday. I like UEC. The reason I like UEC is because they have a bunch of projects. They have a hub and spoke model in South Texas. They have projects basically all over the US and across the world, and they're going to have incredible capacity. And the thing about in the US wants to buy uranium from US companies first. That's what the government wants. It's a requirement before they buy it elsewhere. So you're going to have the increase in uranium coming through the US market to satisfy US demands before you're going to be able to buy it overseas anywhere else. And so this company has some of the biggest overall net deposits of uranium in the US. So they are going to do well eventually. Right now, UEC's physical uranium initiative includes more than 2.3 million pounds of US warehoused uranium, with deliveries in March 2021 and to June 2023 at $30 a pound, U308. Here's a property map. 58 million pounds measured and indicated, 45 million pounds inferred. You've got in Canada, the Athabasca Basin, that's known for its uranium. Paraguay, the in situ recovery uranium portfolio, and UD and Oviedo. Okay, in Texas, the Hobson processing plant production capacity of 2 million pounds a year. The hub and spoke, because you got these other, Palangana, Goliad, Burke Hollow, and Salvo. And 3 of these are fully permitted, Palanga, Goliad, and Burke. They're just looking for slightly higher prices before they can start implementing those. And then you got Reno Creek in situ recovery product, approved permit to mine. Okay, you've got that one as well. And then you've got the hard rock pipeline, uranium and vanadium, Anderson, Workman, Slick Rock, U308 and V205, that's vanadium. And Paraguay, titanium business. So there is a lot going on with UEC. They've got a ton of stuff, uranium, vanadium, and titanium, mostly uranium. Titanium is important. It's a very high strength metal product that's used in alloys and by itself, used in a lot of military applications and building applications. And then vanadium is very important as well. I've talked about vanadium in other programs. We're not going to get into it. Our primary target here is uranium, but you can see UEC has a nice portfolio. We're going to talk about what it has, its properties. In South Texas, USC's operations are anchored by its fully licensed Hobson processing facility, which is central to the company's Palanga, Barcala, and Goliad in situ recovery projects, meaning hub and spoke. And we'll talk about hub and spoke in a minute. But Hobson's where they're going to process it all. They got a bunch of properties around that hub and spoke. Meanwhile, in Wyoming, UAC controls the Reno Creek project, which is the largest permitted pre-construction in situ recovery uranium project in the U.S. Not shabby. Additionally, UAC controls a pipeline uranium projects in Arizona, New Mexico, Paraguay, a uranium vanadium project in Colorado, and one of the highest grade and largest undeveloped ferrotitanium deposits in the world located in Paraguay. So there you go. The Palanga mine, located in South Texas Uranium Belt, has 4,000 historic exploration, development, production holes. So it's been there before by Union Carbide, Chevron, and Everest, okay, past producing. Barcala has situated 50 miles southeast of Hobson, easy to truck it over. Reno Creek project, located in Powder River Basin in Wyoming, is one of the most prolific uranium producing regions in the U.S. and home of 5 ISR uranium mining operations. The Diabase project is a large early stage exploration in Cameco's Key Lake Mill on the southern rim of Saskatchewan's Athabasca Basin Uranium District. So it's in a known area in Canada. And the Oviedo product, which is located in stable and business-friendly Paraguay, is geologically very similar to the South Texas Uranium Belt and anticipated also to be in situ recovery. In situ recovery has some benefits, and it's a little bit easier to recover, a little bit cheaper to recover. That's what ISR in situ recovery is. And there have been in situ recovery operations across the world. It is a proven technology. Here's hub and spoke. We get back down to South Texas. This is South Texas. You can see the little pull out on the map. Here's the processing facility. Here's all their projects. See hub and spoke. Boom, 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 boom. You ship it up there. Hobson processes. Only 10 million initial capex, a 6 months construction timeline to get Hobson running. Low cash cost of $21.77 during operation. Now they got to spend the money up front, but once you operate, $21.77, not too bad. Fully permitted 10-year renewal permits in 2019, so they can go to 2029. The major permits have been issued for Goliad and Burke Hollow, so a lot of these are ready to go. Now, there is some initial capex they need up front and operating expense they need up front, OPEX. That's why they need slightly higher uranium prices, but they're getting really close. And as that uranium starts to really get into its growth cycle, and Steve and I talked about possibly $100 to $200 uranium based upon supply demand over the next 5 to 10 years, okay, then we think that UEC's properties are become very fashionable, and it's going to feed into U.S. government requirements for uranium, okay, and for energy, because they want to source it from the U.S. So UEC is uniquely positioned. Now let's talk about management. It always matters about management. It's run by Amir Adnani, founder and CEO. He's also founder and chairman of Gold Mining Inc. We've talked about that on the program before. We like them as a gold mining prospect. He has extensive experience in building natural resource companies from the ground up. He's done it before. Then you have Spencer Abraham, the chairman board of directors, served as a U.S. Senator from 95 to 2001, Secretary of Energy from 2001 to 2005, and previously non-executive chairman of Ariba's U.S. board. So he has experience in the industry, and he has the connections to the government that you need when you're going to sell to the government and get permits and things like that. Very important to have on your board. Scott Melby, executive president, 35 years of experience in senior roles with uranium majors, Cameco, Uranium One, Kazatomprom, and former president, Uranium Producers of America, and chair of the World Nuclear Fuel Market. Okay, big names here. These are guys that know what the hell they're doing. Robert Underdown, VP of Production, has held senior operational position ISR at uranium mines in Texas for over 35 years. Now looking at the shares, they have 233.2 million outstanding, 251 fully diluted. Recently, it's about $2.33 as of July. I haven't looked up the price recently, but it's in that range. They have a nice, healthy trading volume, about 5.8 million shares, market cap about $500 million, only $10 million in debt, and they have a bunch of money on the balance sheet. So net, they're very solvent right now without having to raise additional money. USC top shareholders, USC team, BlackRock, Vanguard Group, State Street, Fidelity, Northern Trust, UBS, CF Holdings, Sprott, KCR Fund, and Global X Management. Major names. They have the backers. They're going to be able to do this. They're going to be able to raise the money and put these into production and run these projects and get what they need from the US government and be able to trade in the US. It's going to happen. Analyst coverage, they've got 5 different analysts covering them. Canaccord, H.C. Wainwright, 8 Capital, Haywood, Roth Capital. Those are the big names that are going to cover resources. They've got them all. So everybody's covering UEC. So everybody expects UEC to do well. And then remember the Russell 3000. This isn't somebody trading on just like the Toronto Stock Exchange. Not that there's anything wrong with that. Toronto's venture, or trading on like the OTCs. They're the Russell 3000. So again, well recognized on a major index, plenty of average daily volume to trade in there, good financial position, good people invested in them, good projects, good analyst coverage, the whole 9 yards. Okay. This could be a really good potential investment for you as that uranium price rises and they bring these projects into production. It's going to happen. You need the uranium. Again, you need the uranium. This is going to happen. Okay. It's just a matter of time. So here's the investment summary. They have 123 million in cash. Remember, only 10 million in debt, 123 million in cash, equity and physical holdings. Fully permitted and state-of-the-art infrastructure, Hobson processing plant, ready to go, hub and spoke in Texas. Pipeline and fully licensed, low cost in situ recovery projects, potential production profile of 4 million pounds a year in Texas and Wyoming. Physical uranium initiative includes 2.3 million pounds of U.S. warehouse. They've already got it warehoused. Advanced production readiness of Reno Creek. Only U.S. mined uranium can supply the Department of Energy 1.5 billion uranium reserve, 75 million in 2021 appropriations. So in the US, for that reserve has to be only US sourced uranium. Now the rest of it can go anywhere. But again, the US is building reactors, China's building reactors, Russia's building reactors, Japan's going to build more reactors, India's going to bring more reactors. And the only way to deal with the energy deficit that we see coming and to comply with the ESG programs, environmental, social, and governance programs, the only way, ladies and gentlemen, is to use uranium. We proved that over this 3-part series, this being the 3rd of those parts. Now we're going to do more parts of these series. We're going to bring Steve back and we're going to talk about uranium more as this thing starts to take off, as the commodities market takes off, and as uranium specifically takes off. And I will come back as well and talk about UEC, but I think this is potentially a good investment. Again, I've been following for 3 years. I know the company fairly well, talked to their CEO, talk to other representatives of the company. I've been just waiting on that uranium bull market to start back up. Well, a lot of us have been waiting 2 to 3 years for that supply destruction phase, which comes about every once in a while, to finish, so that you don't have enough supply for demand and that price rises again. But it's not a normal market where we're just like this. No, energy usage goes up like this. ESG programs curtail the fossil fuels, and hydroelectric, geothermal, solar, wind cannot support all the base power needs, not even close. The only thing that can is uranium. Boom, here it goes. Commodity cycle, energy cycle, bam. Uranium is going to follow that straight up. UEC is uniquely positioned to assist the US government in their reserve, but also to produce uranium for the United States reactors and for the rest of the world. And we're going to need that going forward. It is the only relatively clean energy. And I say relatively clean because none are 100% clean, but it's much cleaner than coal, natural gas, oil, those types. Relatively clean fuel that's going to meet the ESG initiatives you saw, which are going to be put into place starting 2021, but have to be finalized by 2030 to 2050. Okay. So long-term, huge bull market, even the next 3 to 4 to 5 years, big bull market. That's why Sprott bought so much uranium and is investing in all these companies and increase uranium in their fund. And they have much bullish price target going forward. And that's why you see all these companies looking at UEC, because look at all the projects they have, tons in the US, and then they have some outside the US as well in South America, and then one in Canada as well. So they're geographically dispersed, good projects, good economics. They have the money they need to start building. They're just looking for that price to hit a point at which it makes sense, and boom, they're off. And remember, uranium is sitting at a cycle low, a big cycle low dating back to 2005. Okay. That's about a 16-year cycle low. That's a pretty long cycle to be in. And it had that tick up in August. Okay. And what we're going to see is it going to continue to slowly march up until the point at which there's a real shortage and it's going to pop straight up. because of energy demands. And energy demands are only going to rise. You're going to see the Indian Chinese middle classes rising, more electricity needed, more pressure on coal, more pressure on natural gas, more pressure on these fossil fuels. And that's not going to change. All these things have been signed into law, and that's what the governments want, and that's what the law constituents want. So again, UEC is uniquely positioned. I think it potentially could be a good target for you. Go back and review Steve's video last night and look at some of his targets. We want to bring you multiple targets. I've liked UEC for 3 years, okay, under the right timing. I think we're now in the right timing. That's why I'm bringing it out, okay. And this will be the uranium investment will be strong for another 10 to 15, 20 years until eventually we get to thorium age. I think we'll get there, but man, it's going to be a long time. A lot of us are going to be retired and done with our investing careers before that ever happens, because what they have to do to shift and to develop and to mine and do all that stuff for thorium is going to take at least 20 years. Steve and I both think that. So it's uranium's time now. The next 5 to 10 to 20 years, uranium is going to happen, I believe. All right, that's going to wrap it up for today, guys. Until next time, this is Rob Keens of Gold Silver Pros.